Whittier Trust believes that real estate owners are prime estate planning candidates. Everyone is taxed on what they own when they die, and there are only two ways to reduce that tax: own less or make what you own worth less. Real estate owners are uniquely situated to do both, and I will share how Whittier Trust specializes in helping clients plan ahead to minimize tax liabilities. When speaking to clients or prospects or centers of influence, we like to tell them that without proper planning, a real estate investor's family can be left to pay significant estate taxes without the liquid assets to make the payment. This is because real estate investors often spend much of their careers accumulating prime real estate assets that are irreplaceable. When a real estate investor passes away, even though estate taxes can often be paid over a 14-year period, the cash flow needed to make those payments can significantly reduce cash available to provide for the family. Or worse, for investors with significant portfolios, such assets may need to be sold to pay estate taxes, and the owner's efforts in putting together a real estate portfolio can be lost. With proper estate planning, however, those assets can be maintained to provide support for future generations. To make what they own worth less, Whittier Trust helps real estate owners utilize another advantage with respect to estate planning, as they most often own their assets inside of entities. Whittier Trust can help owners make gifts of their interests in entities while taking valuation discounts for lack of control and lack of marketability, which appraisers typically discount in the range of 30 to 40%. For example, a real estate owner holding a building in an LLC structured with a typical 1% managing member interest and a 99% non-managing member interest can gift their 99% non-managing member interest with a 30% discount. Whittier Trust specializes in multi-generational wealth planning for real estate owners. Whittier Trust helps real estate investors utilize strategy of gifts or sales to trusts for family members to allow the real estate assets of those trusts to be properly administered for beneficiaries in the future. If properly planned, real estate assets of those trusts can pass not only from the real estate owner to his or her children, but also onto his or her grandchildren by taking advantage of the generation skipping transfer exemption.